Welcome to What to Trade section, presented by your host today, Anmol Singh. About a little bit about me before we get started. I started trading when I was in college, first year of my university. Didn't make any money the first year of my trading. In fact, even lost money after commissions and platform fees. But I kept at it. Started trading from university. Then during second year of university, I traded for a pretty popular trading firm at that time. Made money for them. Used to trade money in their accounts in exchange for a profit split. And eventually they asked me to come on board as a teacher and teach other people how to trade, but more importantly, run their live trading room where people could actually see me trade live. So I traded for them for a little bit, and then what happened was people kept on emailing me about learning information, seeing me trade, and then I was contacted by a lot of other firms to see if I can trade for them. But at that time, I didn't really need anybody's money, so to speak. I had enough of my own money saved up that I said, you know what, I'm going to go at it on my own. So I started trading on my own, which led to me having a pretty good social media following on Instagram, on Twitter, and StockTwits. I was put on StockTwits interest lists, which basically means the people to notice. So eventually, due to all that, I decided to go back into the education business along with my partners, Jared and Jay. We thought, let's do something different here. Let's give people reality about trading. Let's give them the truth about trading, and let's trade live in front of everybody and show our results, winning or losing, because that's how people learn. So I want to dive in straight into the content because I have a lot to cover for you. So that was just a little bit about me. I was born and raised in India. Then I did my Bachelor's of Science in Business Management honors from Brunel University in London, UK. And then, I went back into India, traded there for a little bit, but then I realized, hey, I'm actually making really good money trading, so let's just make a move. So I moved to New York and I started investing in other businesses, other companies, did a lot of private equity, venture capital, and also, managing funds for my friends and family. So that's how we led to Live Traders, where now we actually train and teach other people how to trade, and more importantly, build a career for themselves. So anyways, a lot of content here. I want to dive straight into it. I'm going to teach you just what you need to trade, okay? So in the next section, Jared's going to teach you, where to trade, about different trading accounts. In this section, we're going to cover a setup that I really like, okay? There's a couple setups that I really love trading, and I'm going to cover with you one of my setups, which I use pretty much every day to make my living on a day trading basis. Now, the setup that I'm going to cover with you is known as a 3-bar play, or also known as a 1-2-3. Okay, and this setup can be applied to day trade, to swing trade, to long-term trade, to trade forex, to trade stocks, to trade futures, indices. You can use this setup to trade any instrument you want, right? Stocks, forex, equities, anything. All right, and this setup is going to work on all different time frames. So if you plan on holding stuff for a couple days or a couple weeks, then you want to find this setup on a daily chart. Okay, if you're looking to day trade this, you're probably going to find this setup on a 1-minute chart, 2-minute chart, 5-minute chart, or a 15-minute chart. All right, and if you plan on long-term trading something, you hold it for a couple months, a couple years, then you want to find this setup on a weekly chart or a monthly chart. Okay, so I mentioned that to clarify to you that this setup is not just a day trading setup. You can trade it on any chart, all right, in any time frame. Depends on what you're looking for. So let's dive in straight into the setup. Okay, this is one of my favorite setups. I trade this frequently on all different time frames, and over the years I've made a lot of money trading this setup. So this is called a 3-bar play. Okay, and this is a really high quality professional trading pattern that is not only effective in money making, but also it's really simple to learn. And it's simple to learn because it's visual, right? It's like a picture. Because once you learn a setup, right, you can pretty much repeat it every single day, right? And it's a picture that you have to remember. And trading setups and learning how to trade, technically, it's all about pattern recognition. It's all about, recognizing that picture, okay? So for example, if I show you a picture of someone, all right, someone you've never met before, someone you've never seen before, okay, and I show you their picture, you're probably going to recognize the next time I show it to you, right? Same way, if I show you a picture of, Angelina Jolie, or I show you a picture of Brad Pitt, right? Without even me telling you who they are, you're going to know who they are. That's how these technical patterns work, right? Because maybe the first time you see it, second time maybe you don't recognize it enough, maybe second time is not that clear, but the more you look at charts, the more you look at patterns, the more you look at the setups, the more they become clear and clear the next times you look at them, right? So I want you guys, that's why in this presentation I'm going to show you the same pattern in a lot of different stocks a couple different times, okay? So that it imprints in your mind, so that the next time you look at these setups, you're able to see it, okay? I want it to be clear as picture, right? So if I want it to be like, this is a picture of Angelina Jolie, so the next time you see it, you know it's Angelina Jolie. So in fact, maybe we should rename this setup Angelina Jolie, but we're gonna keep it as a 3-bar play because we're professional traders here, okay? So what we don't want in our trading desk, in our proprietary trading floor, we don't want people shouting, hey, here's an Angelina Jolie setup. So we're calling it a 3-bar play, all right, or 3 BP short. That's what our chat room members use. If you're finding something, chat room members might post, hey, watch First Solar setting up a 3 BP, right? Hey, watch Baba, it's setting up 3 BP, or Apple setting up 3 BP on the 5. So that's how we use our analogy in the trading chat room. So we're able to find these ideas and nail them in real time, all right? So here are the rules for the setup. Super simple, all right? Super simple, okay? The first bar should be a wide range bar. So what do I mean when I say wide range bar? It's pretty simple, okay? The first bar, the length of that bar should be wide. It should have a wide range, all right? So you see here, this stock went from 61, all right? And by the way, this is a 15-minute chart. You can note that. Stock went from 61 to 61.70, 61.80. So about, 80 cents. So that's a wide range bar, right? But it's not really depending on cents or dollars or a percentage. A wide range bar is more of a visual concept, okay? So in this scenario, right, I show you this green bar, you can pretty much tell it's a wide range bar, right? Because look at the prior bars, look at the previous bars, they're all a little bit lower. So wide range is something that's a relative concept, okay? So that means relative to the prior bars, right? So you might look at this bar on a daily chart and it might not be that big, So it's a relative concept. You look at the prior bars and see, all right, this is a pretty wide range bar. Now, here's a cool rule. The second bar should be a narrow range bar, all right? Narrow range bar. And here's another rule that I'm going to add. It should be a narrow range bar, which should be above the 50% line, okay? So this second bar, bar number 2, should be in the top 50% of the range. Even better is if it's in the top 30%, okay? So if you see here, the second bar is a narrow range bar, all right? It's inside the range of the first bar, and make sure it has to be an inside bar. So what an inside bar means is that the bar number 2 should not take out the high or the low of the first wide range bar, all right? In fact, I'm going to go as far as to say that the second bar, of course, it should not take out the high of the first bar, but it also should be in the top quarter, all right, top 30% or top 20% of the first bar's range. So if this second bar penetrated all the way down, right, let's say to 61, 61.20, that would not be bar number 2. That would not be counting as a narrow range bar, okay? It needs to be in the top 20 to 30% of the range, all right? So that's bar number 2. Now the bar number 3 is the bar that you're going to enter on. So you see here, bar number 1, wide range bar. Bar number 2, narrow range bar. In this case, someone in the chat room is going to post, hey, FSLR 15 3BP. All right, we're going to look at it. We're going to see, okay, bar number 1 is a nice green bar, wide range bar. Bar number 2 is a nice inside bar. And we're going to look to enter this trade on the third bar. So in this case, what we're going to do is we're going to take a stop market order or a stop limit order, whichever you prefer based on your trading. We use that order to buy it 1 cent above the high of these two bars. So the high of the first bar is 61.80. The high of the second bar is 61.70. We're going to enter on 61.81, 1 cent above the high. Okay, and we're going to put our stop loss below 1 cent below the narrow range second bar. Okay, we're going to put our stop loss sometime under the second bar by a penny. All right, so the second bar's low is 61.60. We're going to put our stop loss at 61.59. A lot of times, in my personal opinion, I also give it a couple cents below the second bar's low. Okay, so the second bar's low in this case is 61.60. I often actually give it 61.50, like 5 cents, 10 cents below, just to give it that little wiggle room. Sometimes there's high frequency traders, HFTs, or the market in general is choppy, and you might, on the third bar, it might pierce it by a little bit. You get shaken out, and then the stock goes. So it's always better to, give it a couple cents below. All right, you don't need to always. So if it's a stock like Microsoft, stock like Oracle, Cisco, I'm probably just gonna give it 1 cent below. But if it's a spready stock, like Solar City or First Solar, or something where the spread on the level 2 between the bid and the ask is more than 2 to 5 cents, then I give it a couple cents below. Okay, because this is a 3-bar setup. All right, you can see here on the third bar is where you got triggered in. You're in now. You put your stop loss here, and boom, that third bar just explodes higher, goes straight to your target, and that's how you make money. In this case, if you entered at 61.70, the stock went to 63 pretty much in the same day, right? So that's how you make money in this. However, one thing to note, sometimes the 3BP, the 3-bar play, could also end up becoming a 4-bar play, a 5-bar play. Sometimes that happens too. And I like those too. So it doesn't have to be 3-bar play. The thing is, on the 3-bar play setup, your criteria is met. Once you have bar number 1, once you have bar number 2, right, that is when your criteria has been met. Now, it doesn't necessarily need to be triggering the setup on the third bar. It could be triggering on a 4th bar, 5th bar. Sometimes you get a little bunch of these narrow range bars, and then it goes on the 4th or 5th bar. So keep that in mind too. Okay, so here's an example of this setup. All right, you see here CF, chart of CF Industries. You see this is a daily chart here. Stock's been basing sideways. It's been going sideways, 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 and then next day it gaps up. Right, a gap up happens when the stock opens higher than where it closed the prior day. So the prior day, you can see here, stock closed at 220, and for whatever reason, could be an upgrade, could be earnings, could be some good news on the stock. Stock actually opens, instead of 215, opens at 230. So that's a $15 gap that the daily chart left. All right, the distance between today's open and yesterday's close is the gap. All right, so here we see CF Industries opens up at 226, right? We get a wide range bar. Stock goes up from 226 to 231. We get a wide range bar, and then look what happens. Second bar, narrow range bar. Third bar, narrow range bar. So again, now this, instead of becoming a 3-bar play, ends up becoming what I just covered with you briefly, could be a 4-bar play, right? As long as the first bar is big, second bars are slow, the criteria is met, we enter the stock above the high of all these bars by a penny. In this case, we enter at 230. We put our stop loss at 229, so we have a $1 stop loss, and the stock went to 237. Stock went up $7 with a $1 stop loss. So basically, that would mean 7-to-1 reward to risk, and you can see the P&L here is a nice little $1,300 trade. All right, so again, I want to show you these examples. I want to keep this presentation short and sweet. And there's a reason for that, right? I didn't want to make this a long presentation for you and give you a lot of content, a lot to think about. That is because I want you guys to execute. I want you guys to execute on what you've learned, right? Because a lot of people become these course learners who keep on taking course after course, watching video after video, learning setup after setup, learning system after system, strategy after strategy, and you talk to them 1 year or 2 years from now and they haven't made any money trading. That is because you're not executing. All right, start with one setup, master it, all right, then you move on. Okay, so I want to show you the examples to cement it in your mind, so the next few times you see it, you're absolutely clear on these setups. Okay, so here's another example. This is a 2-minute chart, right? So the early CF chart I showed you was a 2-minute chart. All right, now here again another 2-minute chart. So you see Fitbit FIT stock is gapping down. Okay, gapping down. So last day it closed around $13 and change. The next day it opens up at $12.70. You see how it left a gap between the prior day and today? So that's a gap. And look what happens. The first bar, wide range bar, right? Relative to the prior bar, look at the prior day's bar, such tiny bars. But this morning you put in a wide range bar. Look what happens on the next bar, right? You get a tiny little narrow range bar, which stays in the bottom third. Perfect, right? Perfect. And then on the third bar, you enter 1 cent below these two bars, 1 cent below the wide range bar. You will short it in this case. Now again, this setup works great on longs. It also works great on shorts. It works both ways. So you can use the setup to trade long side and also the short side, okay? So in this case, the last two examples I showed you were long. These two examples are short, okay? So you would short the stock here. You put your stop loss above 1260, above the narrow range bar, and look at the drop you got. So you probably here had about a 5 to 10 cent stop loss, and the stock dropped $60 freaking dollars, okay? So that's 6-to-1 trade. Okay, so that's another example. Here's another example, FSLR on the long side, right? We covered that before. I want to show it to you again to cement it with you, okay? Wide range bar, second bar is a narrow range bar, and third bar explodes. And in fact, look what happens after, okay? Even after the 3-bar play triggered, it did it again. This time 4-bar play, wide range bar, you get an inside bar, another narrow range bar, doesn't take out the 50% of this wide range bar. You can play it again over here, put your stop under the bottoming tail, and it starts to go again. But note, here's a really important thing about this setup, okay? Really important thing about this setup is also the prior day. All right, so in this case, in the case of FSLR, you will see the wide range bar was taking out and clearing resistance from the prior day. Yeah, so it's clearing resistance from the prior day, because here you will see, let me draw a line in here. So in this case of FSLR, let me show you this here. If I take this little tool, you see how right about here, all right, right about there, I'm gonna increase the width of this. You see how this level was a resistance? Whole prior day, it couldn't get above 61. It touched 61 again, failed. Tried to come back up, failed. The next day, try to come back up again, failed just below 61. So 61 ends up becoming resistance. So this wide range bar is clearing resistance from the prior day, right? That's when the criteria is met and you're good to go. Okay, so again, I'm going to show you these examples again. Here's another chart of SanDisk, SNDK. All right, so you see here the stock cleared resistance. Again, I want to show you this here. You see how the prior day was a resistance level, right? It kept on failing here. 67.50 failed, 67.50 failed, 67.50 failed, and the next day it gaps up to 68. So it clears the resistance. Look what happens. First bar, green bar, wide range bar. Second bar, tiny little bar, right? Boom, we'll put our order in to buy it here, put our stop loss there, and the stock goes up from 69 to 70.50. So this is a 5-minute chart. Now note what happens here. It actually does it again, you know? It does it again. On the 15-minute chart, now you see wide range bar. The second bar, narrow range bar, doesn't take out, it's still in the top third. That hasn't taken out the high even, so now you can play it again. Right here, and boom, it goes higher again. So you can play it on all time frames, all right? Now, I want to show you another example. Now this time, I'm going to show it to you on the short side. Again, as we covered, this setup works great on longs, it works great on shorts, okay? And I really, really want you guys to learn this setup so you guys can start executing. And when you make money using this setup, all I ask for you guys is to leave me a review, leave me a testimonial, okay? Or just leave me an email. You know, I feel good about it because when I get emails from my students saying, "Hey, man, I'm making money. Finally, I'm making money." Or a losing trader might email me saying, "Hey, I'm finally breaking even," or a trader who's making a little bit of money emails me saying, hey, I'm finally making money, that makes it worth it. That makes it worth my time. I feel good about myself. I feel good about my day. And my day is always happy when I get those emails, because I feel like I'm doing something that's actually helping people. So I love that. All right, so now let's look at setup again on the short side this time around. This chart of into on a 15-minute. First bar, wide range red bar. Okay. Second bar, narrow range bar. Boom, again. Third bar, you get triggered in, you short the stock, you put your stop loss here, and the stock drops from 97 to 94. All right, 97 to 94, guys. 97 to 94. That's a $3 drop in the same day. Okay, it's a 5-to-1 trade. And more importantly, here's something really cool that I want you guys to notice. Okay, this setup was good and even better because of what it did. Look at this from the prior day. Right, you guys are noticing a theme here. See this? Prior day it couldn't break 97. And today it sold off, couldn't break 97. The second bar sold off to 97, couldn't break it. So now when it's taking it out, it's not only triggering a 3-bar play, it's also breaking prior day support level. And also it's breaking the whole number, 97. So three things coming together. It's breaking a whole number, $97. It's clearing last day's support, and it's triggering a 3-bar play. So the more things that come together, the better. Okay? So this concept is known as confluence. So when you've got confluence of different trading concepts coming together, usually those setups will always work well. If it's just breaking support and you trade it based on that, it's not going to be as potent as this, because this is 3 setups in one. Breaking support, breaking a whole number, and also a 3-bar play. So this setup is more potent than the rest. Okay? And to be honest, as a trader, as a newer trader, you should only focus on stuff that is doing everything perfect. Okay? Everything perfect. It should be taking out support. It should be taking out, whole or half number. It should be setting up a 3-bar play. The more things that come together, the stronger the setup, and the stronger your chance of making money, good money, in that trade. Okay? So that's one setup. I want you guys to go out, execute, and learn. We're going to quickly flip over these charts one more time, because as I told you, I want it to be so clear in your mind that it's like a picture. So the next time someone shows you this picture, you're like, okay, I know what it is. That's a 3-bar play. All right, so the only difference between you or me, a brand new trader, and a professional trader, there is no difference. The only difference is time. The only difference is chart time. I've just seen, I'm not a genius, I'm not making, the amount of money that I do because I'm a genius. I'm making money. I'm a great trader. I'm a professional only because of one reason. I've just seen more charts than anybody else. As I told you guys, I started trading in my college. Okay, I didn't even go out that much. I was just sitting in my dorm room, looking at charts, flipping over charts every single day, every single night, almost to a point that I was so addicted to it. I was like geeking out on these charts. I was just flipping over chart after chart after chart. So the only, when people ask me, what is the biggest thing and why do most traders fail and how come you're successful? There's only one reason. I've just spent more time looking at charts than you have, That's it. That's the only difference. So there's nothing special about me. I was horrible at math in school. I was the average student. I wasn't bad. I was average, 60%er. Getting B's or C's, just getting by, passing, college or school. But the only reason I'm able to make money every single month, every single week, trading, is because I've just seen more charts than anybody else, and all my setups are back tested. Okay, that's the only difference. So what I want you guys to use is just a simple setup. Okay, and my personal advice to any trader is this: learn one setup first. Really master that one setup first. Really get good at that one thing before moving into other setups. Because a lot of traders have this misconception, hey, shouldn't I have all these tools under my belt? Shouldn't I have all these setups in my playbook? The answer to that is yes, you should, but not right now because you're not a professional. So rather than becoming a jack of all trades, really get good at that one thing. Really master it down so that you as a trader are confident in that one setup. You got to be the master of that setup. Nobody should know more about that setup than you do. Know every little detail, every little nuance about that setup, and really get good at it before moving or incorporating any other setups into your trading. Because you're gonna see people teach you all sorts of setups, okay? But not all setups are great. Anybody can give you examples of charts, right, showing you, oh, look how good this setup worked. But I'm talking about back testing. All my strategies have been back tested. They've been forward tested. I have detailed statistics for each trade, right? For example, this trade is going to have a batting average, a win rate of about 75%, and average winner is going to be, 4-1, 3-1, or 5-1, depending on how you manage it. Now that's totally a different concept, because you might get in here at 97, you shorted the stock, and you might get out for 50 cents. So that's your fault, not mine. Each trader got to figure it out. Some traders will short this at 97, they'll get out at 96. Some traders will get out at 95. Some traders will get out at 94. Some traders might just hold on to it all day long until the next day. Some people might get in and they might get jittery. They might just exit it when the stock goes against them a little bit. So that's a whole different concept. I'd love to go over it with you in detail, but frankly, I don't really have time right now. So, because I want you guys to just master one thing. I could have given you a presentation showing you 1,000 different setups, but I only want to give you a nitty-gritty so you can master it, okay? So we're going to flip over these charts one more time, and so that we are totally clear. Step number 1, look for a daily chart, a 60-minute chart, a 15-minute chart. Look for resistance levels on those. Mark them down like they are marked here. Resistance has been marked. Then look for a bar breaking resistance. When you find that bar breaking resistance, you look at it and see if it's a wide range bar. If it's a wide range bar, awesome. Check it, check mark. Now you're going to look for a second bar to be a narrow range bar. Is the second bar a narrow range bar? Ask yourself that question. It is? Okay, check mark. Boom, now we can put our order entry and our stop loss. Entry 1 penny above the high, stop loss 1 penny below the narrow range bar, plus or minus a couple cents if you want to give it a little bit of room. You enter and then you manage in between. Some traders that I know just do 2-to-1, right? If a stop loss $1, they're going to look for $2 target. Some people do 3-to-1. Some people just hold it all day. So that is up to you based on your own trading psychology. Okay? Again, flipping over chart after chart. Bar 1, wide range bar. Bar 2 and 3, narrow bars. Entry, stop loss, and manage the trade. Same thing here. Wide range red bar. Little narrow range bar. Entry, stop loss, you short the setup. Wide range bar, breaking resistance, narrow range bar, entry, stop loss, and you manage the trade. Breaking resistance on the last 5-minute chart. Wide range bar, narrow bar, you enter, you put your stop, and the stock goes. Alright? We also call this 3-bar play 1, 2, 3 for obvious reasons, right? 1, 2, and 3. So that's how it goes. So that's a simple setup. I want you guys to learn it. I want you guys to execute on it. And don't be afraid, guys. If you're a brand new trader, or if you're a trader who's never traded this setup before, my suggestion to you is to get a demo account, get a paper trading account, and just demo trade it for yourself. You will find out how well this setup works. And more importantly, if you have been tracking this setup, or if you don't even have a demo account, that's fine too. Just watch charts every day. Every day, I want you to take a look at the 5-minute chart, the 15-minute chart, 1-minute chart, 2-minute chart on any stock that is a gap up or a gap down. Okay? I want you guys to look at the chart and look for this setup. Just try and spot it. Okay? Just try and build your brain muscle, right? Build that picture identity, right? So next time someone shows you this picture, or next time maybe you are live in the marketplace looking at charts, flipping over charts, you see the setup, you're like, oh, that's the 3-bar play that Anmol taught me, right? That's what you want to get to. You want to get to a point of unconscious competence, right? Everybody consciously they know what to do. Okay, if I just give you one chart to look at it, you will consciously look at it and find it. But I want to get it to a point where it's imprinted in your mind that next time you're just flipping through charts without even specifically looking for, it sticks out to you. Okay, it's an easy setup to learn. I mean, I couldn't have taught you any other easier setup than this. Okay, but again, it all depends on you as a trader, how you get in, how you execute, and more importantly, how do you manage the trade. Okay, so go out, execute this setup. Don't be afraid, guys. Don't be afraid to execute. There's no room for fear in trading. Okay, and I don't want you guys to go out and watch other videos. I don't want you guys to go out and learn a bunch of different setups. First, make money in one setup. If you can't make money trading one setup, you probably won't make money learning 2, 3, or 4 different setups. Okay, so master one thing. I can't emphasize the importance of that enough. As you can probably tell, I'm repeating myself right now. That's what I do with all my students. I repeat myself every single day until they prove themselves and until they make me some money. Okay, because a lot of traders, I give them my own capital, my own money to trade, and I take 20% of their profits. So I want every one of you to join me to trade these setups, make money, so we can be partners on that. If you don't want to do anything with it, that's perfectly fine. Go out, trade on your own setup, and trade these setups, make some money. I'd love to hear from you guys, feedback and thoughts on this presentation, and more importantly, I want you guys to execute these setups. And if you want, if you're dedicated, if you're willing, you have the willingness to learn, you got an open mind, then I'd be okay and willing to work with you. Okay, but if you're serious, find some of these setups. I'd love to hear from you guys. My email, I'm just going to type it in here in a brand new slide. I'm going to type it in my email here. You guys can contact me at unmol@livetraders.net. That's my personal email. So if you guys want a homework, here's a homework for you. Here's some action steps and some action items. I want you guys to go over flip charts, okay, and try and find this setup. When you find some setups like this, take a screenshot, okay, and email them to me. I'll give you my personal feedback and thoughts on if this is a good setup, if this is a bad setup, if you're seeing things correctly. Okay, I'll give you that feedback just for watching this presentation. Again, I usually try and respond to my emails pretty quickly, but as you guys know, I get hundreds of emails every day, so sometimes it might take a little longer, so just be patient. My goal is to respond to each one of them personally. I don't get my assistant or anybody to reply to my emails because my goal is to respond to each one of the questions personally. Okay, so I'd love to work with you guys if you're committed. If you're not committed, go somewhere else. There's plenty of trading education firms that you guys can go out and test out. I'd be happy to refer you some trading education firms because frankly, I'm only going to work with people who are committed and more importantly, just have an open mind and a willingness to learn. That's it. If you have those qualifications, which are easy to meet, you have those qualifications, email me. I'd be happy to work with you. Okay, so go check out our website, livetraders.net, livetraders.com, whatever you want. As far as my personal bio, I already gave it to you, but if you want to know a little bit more about me, just type it on Google, Anmol Singh Live Traders, and you will know exactly what you need to know about me. Okay, so go do that, go execute, go profit, and go make some money. All right, thanks.